If you had bought just $1,000 of the right stocks 30 years ago, you'd be a millionaire today. Warren Buffett once said his favorite holding period is forever. I've taken that to heart, and after shifting through decades of market winners and losers, I've narrowed it down to 3 companies I believe fit that philosophy perfectly. This could be the most important watch list you ever build, so let's kick off this list with a company whose products are probably in your kitchen right now. Whether you drink soda or not, this is a business that's mastered the art of owning both your snacks and your beverages, and it's been quietly rewarding shareholders for decades. I'm talking about PepsiCo, a global powerhouse with a portfolio that stretches far beyond the blue can. Let's break down why it's on my buy and hold forever list. Take a look at PepsiCo's annual returns going all the way back to the 1980s. Decade after decade, through recessions, market crashes, and booms, it's found a way to keep delivering growth. This isn't a hype stock, it's a compounder. Now, even though this is the definition of a buy and hold forever company, here's the thing: price still matters. The difference between buying at a fair price and buying at a discount can mean tens of thousands more in your pocket over the long run. Here's PepsiCo's recent price action with the Fibonacci retracement tool applied. These levels don't predict the future, but they do highlight key levels where buyers have historically stepped in. So if the price starts pulling back, these levels of the Fibonacci are generally where we tend to see the price find support before it bounces back up. If the stock ever dips into one of these zones, it could be a smart time to average down or add more to your position. So it's worth keeping an eye on the price when it gets close to these areas. Naturally, you might be wondering what these levels are, so that's what we will look at next. This level is around $143, and the level below this is around here, which is $128. Now, if you're thinking, okay, these entry points make sense, but I don't have the time to constantly keep an eye on the price to catch it when it hits one of these entry points, then don't worry, because I've got a free solution for you. I've got this free service that you can sign up for, and I'll send you alerts as soon as the price hits one of our entry points completely for free. The link to join this is in the description below, but don't worry about signing up now. Feel free to continue watching this video, and I'll remind you about this at the end. So that's PepsiCo, stable, diversified, and built for the long haul with a little extra upside if you buy it right. Let's move to the second stock on my list, and this one dominates an industry that touches billions of lives every single day. It is of course Visa, one of the most profitable toll booths in the global economy. Every time you swipe, tap or click buy, Visa is likely taking a tiny cut, and those tiny cuts have added up to massive returns for shareholders. Just look at this track record: consistent green years with only a handful of small pullbacks. Even during market turbulence, Visa's business model, charging fees on transactions, has kept it remarkably resilient. Now, as with PepsiCo, this is a long-term hold for me, but that doesn't mean I'm buying at any price. Using the Fibonacci retracement tool, here are the key price levels I'd be watching to add more if the market gives us a discount. The first entry point is going to be around this Fibonacci level, which is $328. The level below this is going to be around here, which is $314. And the third entry level is going to be down here, which is $299, very close to 300. So Visa is the second stock on our list, and you've probably noticed that I'm using technical analysis to break these down. Some people trade based on the news, others focus on earnings, and then there are those like myself who stick to charts and indicators. There are lots of different ways to invest, but if you're wondering which strategy performs the best, the one that's given me the biggest edge is investing alongside key US politicians. Over the past few years, this approach has consistently outperformed everything else I've come across. When certain politicians make moves in the market, it often signals something bigger, and being able to track that has made a huge difference in my results. If you are curious about how it works, I've put together this free video that walks you through the exact strategy I use, including real trade examples and the returns it's delivered over the last 3 years. The link to this video is in the description below. Feel free to check it out if you want to see how powerful this strategy can be. Coming back to the third stock on our list, from selling books online to powering half the internet, Amazon has transformed into a global empire, and its growth story is far from over. Looking at the returns over time, this massive green bar makes the other bars look small. However, even these small bars are showing over 100% growth in just 1 year. Amazon is currently trading around $222, and these are the levels where you might want to consider either averaging down or buying more. The first entry point is going to be around here, which is $197. And the second entry point is going to be down here, which is $186. So getting in at the current price is not bad, because Amazon is likely going to continue going up for many decades to come. But if we see the price retrace down to these areas, then these are the levels where you might want to consider loading up. I will be making update videos on these 3 stocks as the price approaches our key Fibonacci areas, so if you'd like to stay up to date, consider subscribing to the channel. I'll also be bringing you the best investment opportunities multiple times a week, so that's another reason to subscribe. Also, if you found this video helpful, please consider dropping a like on the video, as that helps out the channel a lot. And if you'd like to learn how to profit like a politician, the link to this free video explaining everything is in the description below, so feel free to check it out if you're interested. As promised, this is your reminder to sign up for the free alerts. The link to join this is also in the description below. It's worth mentioning I'm not a financial advisor, and this is not financial advice. Please make sure you do your own research and your own analysis before you make any investment decisions. If you have any thoughts on these companies or want to share any stocks that have been catching your attention recently, then feel free to let me know in the comment section below. Would be good to hear from you. And if you'd like to watch another video from the channel that YouTube knows you'll love, then feel free to click on the video that's currently on your screen. Thank you very much for watching, and I will see you in the next one.